Hey traders, Nick here again doing homework on Monday night. So let's first of all, this is to look at Apple. So the point is to give you a check mark on where we're at with this stock. It's the king of stocks, literally, as far as market cap. So it's important to pay attention to it. So this is not the chart I want you to see. This is a 15-second chart, which is what we use during the day. So let's take it to a daily chart. And I want to point out a few things. First of all, I am more bullish than most people out there on the market. How about I say it differently? I am not as bearish on the economy and the market as people are out there. It feels like they're feeding us a turd sandwich and telling us it's cookies. Nothing they're saying is making sense. On the one hand, Powell is destroying the economy because it's too hot. On the other hand, they want to convince me that we have a recession going on. On the other hand, we have full employment as they measure it. We were creating a zillion jobs, and the GDP can't even measure it. Inflation is out of control. Well, inflation is not going up anymore. I know it from the shopping things around me. However you slice it, they're not telling us the truth. So you know what the truth is? What this company delivers, what Amazon delivers, what Google delivers. Why? Because it's the law. They can't fake their P&Ls. So how about we listen for the next couple of weeks and figure out what the story is with that. Before I forget, hit the like button if you like it. Debate the points down below. If you disagree with me, you have the right to do that. And subscribe to the channel. It's still free for now. I have a premium subscription that members get my attention 9 hours a day. I'm sharing my screens like you're looking at them live with voice, and we try to trade intraday, and today was extremely fun. All right, so this is a company that I don't need to look at the financials to debate it. We know they sell every widget they make at a premium, and their customers love them. So fundamentally, there's no issue. So let's talk about timing. It is running into a place where I would expect sellers. It doesn't mean you short it. It just means if you're running in now to go all in, you probably are opening yourself up to some drama that somebody that did it here didn't have. So the idea is to try to get in places where you get a couple of green days at least to start your trade. And is it an investment? Is it a trade? If I'm long Apple, I don't add here. I should have added down here. If I'm looking to get long Apple as an investment for the super long term, there's no rush to rush in. And if you absolutely must get involved, and because you're in it for the long haul, then what's wrong with waiting another day? Higher or lower, the argument goes both ways. At least don't go all in. That's my opinion. I'm not giving you advice. I'm just giving you what I wouldn't do. Now, I do have to warn you that Apple was in danger last week. If it didn't close above 134 and 135, there was a scenario that could have taken it to the low teens. And that scenario last week and today was sidelined a little bit. So they need to hold most of this progress. So giving back half of this progress is okay. So 133, I'm okay with it. But if it goes below that and stays below that and eventually loses this, I think it bleeds to the low 100s. And I'm a fan of the stock, not the company. So this is the deal. They're going into earnings. This company will move in sympathy tomorrow afternoon and Wednesday morning with Microsoft. They're kind of the same thing. Great companies that should deliver solid numbers. So the reaction short term is not about the quality of the report, but rather the expectations. Have we built up a lot of expectations short term? So we might have a little dip, and you're gonna hear some genius tell you, oh, they missed earnings estimates. Who gives a fuck what they missed? Earnings estimates. Sorry. Hold on. We do have a cowbell for cuss words during the day. I don't care about the estimates. Tell me how it did relative to itself last year and in sequential relative to last quarter to see if there's huge deterioration in the business. Now, I will start to worry about the economy when companies like Apple and Microsoft and Amazon, 2/3 of the economy is the consumer spending, is slowing down. If the sales are okay and boring, that's what I want. That means the story they're feeding me that it's a disaster waiting to happen is not there. So be patient with Apple. This target is 148-ish, a little below, 147.5. Second target is 158. This is not mine. This is that green thing you see on my screen. It's a harmonic target 1 and 2. It hasn't officially fired, but the relative strength on the chart is pretty strong, and it's not, it is in quote overbought conditions, but small dips, that's what small dips do. They pull it back to a place to where it makes sense to reload and not chase long after the rally. So it just rallied whatever 15%. If it gives back 5 or 6% on some freak out headline, that would be great. That's what people freak from. I run too, because I have my own thesis and they are running in panic. So I'll take my thesis over their panic any day of the week. Anyway, so hopefully this gives some overview of what the price action is like. I don't chase it blindly here, even if it goes to there. I buy the dips if they happen. Hopefully they stop halfway or better. If they go to here, I will take a big long with an immediate stop, because if it loses this, it goes down to here, which is where I will mortgage the kids, the dog, I will remortgage the house, and I will get long Apple for the rebound eventually. You see what I mean? Now, caveat to all this bullishness is what comes out of the earnings reports after the fact, especially Amazon. If Amazon tells me the economy is demolished, then I will retune my level of excitement.